Crypto investors have gone through hell this year. First, we saw thousands of people lose billions of dollars when the Terra Foundation collapsed. Then came the crash, which wiped out about $2 trillion from the market, pushing us into a crypto winter. And if that wasn't enough, investors and traders are now being warned of some unexpected tax bills. Keep watching this video as we tell you more about the alarming situation. First up, it isn't property though. Even if you played super smart and managed to save all your gains from the devastating crash, you better start getting ready to pay up some taxes. With everything that's going on, it seems like we've all forgotten about the incredible bull market at the start of this year. All your favorite coins climbing steadily to the moon. Investors cashing out thousands, even millions in profits. Those were the days. And in case you haven't lost everything in the crash, we're really sorry to be the ones telling you this, but you're probably going to have to pay taxes on the gains. Don't worry though, we're going to make things super simple for you. Say you bought $6,000 worth of Bitcoin. When the price finally went up, you sold it for $8,000, making a profit of $2,000. So you'll only have to pay tax on that $2,000 you made in profit. Pretty simple so far, right? But get this, if that $2,000 pushes your total annual income into another category, you'll be getting taxed at a higher rate. That's what has us really bummed out. It's like being trapped, to be honest. Make too big of a profit, and first you'll pay on the capital gains, and then on your total income. We use the word capital gains because countries which tax crypto classify it as property. It doesn't make a difference if it appreciates in value, but you're only charged when you sell it and make capital gains. Also, if this is the first time you're hearing about all this, then we advise you to do some backtracking and check out how much money you've made this year. If you've been trading a lot and have managed to save up a few thousand in gains, we have some bad news for you. Oh, and it's not just buying and selling crypto. Traders can also be taxed if they've converted their digital currencies into fiat, paid for anything using crypto, or made any sort of money from mining or staking. So be warned, guys. If you've been trading a lot, it's best to sit down with a pencil and paper and figure things out. Next, even staking? You know what's really messed up about all this? Traders aren't even safe if they did absolutely nothing this year. Like if all you did was lock your currency into a pool and gained a return for validating the network, you still might have to pay tax on it. Because again, your income is increasing at the end of the day. It obviously isn't enough to push you into a different tax bracket though, but still, we even managed to come across a user who staked around $1 million worth of Luna at a 20% return, cashing out with nearly $200,000 after a couple of months. We don't know if they lost the money in the crash, but all that doesn't even matter. $200,000 is $200,000 for the government, and that's why they'll have to pay tax on it. And that big of an amount must have easily pushed them into a different tax bracket, so it's like paying tax twice. It's the same with mining. Traders and investors with a super expensive setup better get ready to empty all their pockets. See, mining is a different game. You're not locking your funds away for a guaranteed return. You're buying mining rigs and spending money on electricity to mine more coins. So keeping an eye out on what you're actually making is important. If you use about $50 of electricity daily and manage to mine maybe $70 or $80 worth of an asset, you're only making what? Like $20, $30 maybe? And to top everything off, you're going to have to calculate how much tax you'll pay at the end of the year. Let's talk about being in the crosshairs. Whether you like it or not, we're pretty much in the crosshairs now. Every government in the world is thinking of ways to tax the rapidly growing and evolving industry. The question isn't whether they're scared of crypto or something. It's how they're taxing us. Every time the government talks about regulations to make things safer for investors, all that happens is taxation. Like, isn't it really weird that governments don't recognize crypto as a legal tender, but tax it like it's a fiat or something? Or maybe that's the reason why they've classified it as property. Anyway, we're still firm believers of the fact that taxing crypto is just completely unfair. For starters, taxing is pretty much stifling innovation. We're at a point in time when more and more people are starting to realize the tremendous amount of opportunities available in the digital realm. But with all that's happening, it's just pushing people away. Oh, and the main fact, compiling a tax return is just so damn hard. Like investors have multiple wallets and use multiple exchanges. And let's not forget how the price of everything changes literally every day. Do they expect us to remember everything now? And it's not like crypto tax experts are easy to come across or something. Anyway, education is the best solution. We'd advise each and every one of you to learn more about how crypto taxes work so you can avoid getting stuck in some messy situations. Time for some more on crypto. Up next, trouble for Coinbase? We've seen a lot of exchanges and firms treat investor money like it was nothing. They froze trading accounts, limited people from withdrawing their funds, and even laid off a lot of staff despite having millions stashed away in the bank. But some exchanges actually stayed true to investors, letting them do anything, since it was their money on their platforms. Among them was Coinbase, an American exchange platform with almost 44 million verified users. But unfortunately, even Coinbase is under a lot of heat now as it faces an SEC investigation for selling assets that could have been registered as securities. What that basically means is they let some random developers list some random coins on their platform without any checking. All the platform did was hype up the projects, give them the best advertising spaces on their applications while raking in millions in trading fees. If investors lost money in these unverified and unregistered digital assets, then who cares? As long as Coinbase is making money, right? We're hoping there's some more serious action taken against the platform for trying to mess with investors. And now, for coins that'll make you rich. This is the question on everybody's mind. What's the best coin to invest in that'll make a huge profit in the next bear market? Is it Bitcoin, Ethereum, Solana? If a low-risk, low-reward situation is your thing, then yeah, go for these coins. They'll rise eventually, but it'll take them a long time to scratch out their previous all-time highs. If you're looking to make some serious money, then do some research on Dogecoin and Matic. We've tried to balance things out by giving you the suggestion of investing in either a meme coin or a very strong project. Matic is actually one of the best performing assets from the top 20 list, even outgaining Dogecoin. But since the Doge has a notorious reputation for being endorsed by famous celebrities all over the world, including tech billionaire Elon Musk, it makes it a really solid investment. As per our research, both assets are fairly safe investments. If anything, you'll end up doubling your investment in the next bear market. But don't take our words for it. Do your own research and invest only what you can afford to lose. Finally, the perfect platforms for gambling? If you love gambling and crypto, we have some really neat platforms that can possibly help you win thousands in rewards. The first one is 7bit. This site is really special. Of course, it's gambling, but the rewards are outrageous compared to the risk. All you have to do is deposit around $20 or maybe $30 and get 100 free spins to win fabulous rewards, including the chance to win 5 whole Bitcoins. Wild Tornado is another really cool website with users getting 100 free spins, including 0.04 Bitcoin on your first deposit. So if you love taking risks and want to make it big, give these websites a shot. Also, there's a lot of online casino sites dealing in cryptocurrencies, but be wary of their withdrawal policies. They'll let you win big rewards, but ask for something in return when you're about to withdraw your winnings. With crypto gambling on the rise, who knows? You might end up hitting a home run. And that's it from our side, folks. So did you make some taxable gains in the last bull market? And what do you think about the whole regulation disguised as a taxing gimmick? Let us know in the comments below. Remember, don't forget to like this video and subscribe to our channel for more informative videos in the future. Thanks for watching, guys, and see you next time.